Hey guys, and welcome to the Strategy Lab video. I just finished testing Eurodollar 30 minutes. It is a reback test of my previous market research, and let me first start from the previous market research. Okay, so here's the previous market research. I was testing unified Gartleys with stop loss of 105 with my entry of 786, and the target was the same distance as the distance towards the stop loss, and I ended up with these results, which are 49% probability to hit your take profit. So looks like it is a zero-sum game, but luckily FBU records this B point, C point, D point ratios. It records that time. I have lots of instruments to filter these trades to find which trades are mostly losers, which trades are mostly winners, to analyze the results. After I did this analysis, I sorted the B point and C point ratios, and I ended up with this table. So you can see the row as the B point and the column as the C point, and of course the crossing value is the pattern itself. We have 8 variations in the row, and we have 5 variation in column. Totally we have 40 pattern variation. If we consider a pattern variation a decimal separating feature. For example, the pattern with the B point of 0.3 and 0.4 and the pattern with the C point of 0.3 and 0.4 is the pattern number 1, and so on and so forth. Of course, traditional patterns like Gartley patterns, they have a bit different calculation. It is based on Fibonacci, but according to my market research, Fibonacci is absolutely useless in trading specifically. So it is not exactly the Fibonacci ratio, but decimal ratios work much better. And let's say if you use a Gartley pattern, and the Gartley pattern's B point should be deep one, it should start from 618 to 786. So this is the row of Gartley B point, and the C point should start from 61A and up to 100. Yes, so these cells are exactly Gartley pattern ratios, and as you can see, you'd better trade this Gartley as an inverse pattern, not a reversal one, but as a continuation one. Okay, so we have red and green cells. Green are those that have probability of hitting the target of a reversal more than 50%, and red are those that have probability less than 50%. Okay, now I know which patterns are going to be reversals, which patterns are going to be continuations. Yes, so I coded my MPS, yes, and I created the pattern 1, which has this B point, this C point, exactly like this one, and it is a reversal pattern. Pattern 2, which has this point and this B point and C point, it is exactly this one. I mean this one, yes, this block, and so on and so forth. I coded all these green patterns, and I did the backtest. And earlier I did the backtest of red patterns. Okay, and as I just finished testing the green ones, so let me first compile all the results, and I will also show you how you analyze these results. And then let's examine the results and see what benefits we have using this approach. Okay, let's go to my output file that was generated by FBU. It is stored in these files, and its name is reversal Eurodollar. So this is a file that is generated. First of all, the first thing that I need to do, I need to fill the target 1. And then I need to select that target 1. So I will go to choose the results, and I will copy them, and I will paste the results here. Okay, here's the target one results. By the way, let me do it this way. Let me also insert one row here. Okay, and above row. Okay, perfect. Back to filter. Nice. So we have target one results, time and other stuff is there. First of all, let us see if I made some mistakes. And to check if I made some mistakes, I do the following. If I did a mistake in my backtest, I immediately fix that mistake, typing the second pattern with correct numbers. So that's why it should look this way. If current entry, current pattern equals to next pattern, yes, then type 1, else type 0. Okay, in case we have 1, this means that the pattern was duplicated, it was typed 2 times, and I made a mistake. This only happens when I make a mistake. Let us filter this stuff and let us find something that is 1. So we have only one mistake. And let's delete this row. Now we disable filter. And the second thing that we should do, we should place our cursor here at this entry, and then we also filter that. And if we have 0 entries, there are also some mistakes. Okay. So we have this number of trades that were calculated as zeros. You see, 0 entry, 0 take profit, 0 stop loss. They were not calculated. Okay, delete these rows. Perfect. Now we have these results. Let us open my previous results, and I want to open this reversal results. They are not actual reversal results, they are continuation results. I just saved the copy into this Excel spreadsheet, but now I'm going to place the results here. I delete this one, and I just copy and paste the values. Okay, here are the results, and as we can see, something is not working. Okay, so this equals previous plus result. It should work this way. Okay, so this one is a one-to-one target trading, first target trading, yes, green cells, and you see it is generating something. So the overall probability of trading green patterns, trading them, those that are reversal, you have 56% probability. We will later look at the continuation stuff, the red ones. What is the probability for the red? Well, it is generating something, and let me delete the unnecessary stuff. Delete them, and let us examine. The drawdown is 9%, and the largest drawdown is 400 pips, but we generated here 100, so the largest drawdown is almost half, 1000 is almost half of what we generated. And here we generated how many? 40%, and the 9%, it is a quarter. Well, obviously fixed money management strategy here, when you use 1%, looks better. Right now it looks better. Your drawdown, if compared to what you have generated, is much better than using pips. It is only 25%. The drawdown is 25% of what you have generated, but here the drawdown was half of what you have generated. Okay, let us save this one. we save it as Prex optimization Eurodollar 30 reversal take profit 1. And now let us save it as take profit 2. Go in here, press optimization, blah blah blah, take profit 2. So this way we'll open the second file, yes, and we will get rid of these results here because they are take profit 1 results. And then we will go back to our source file here, delete the stuff. Then we will go here and let us choose the second. Okay. Let's copy it and let us place the second trade. What I need to fix here? Maybe nothing. I think I need to fix nothing. Oh, no, I need to do it the same way. So it equals if the entry equals to next entry. I mean, it is a duplicating trade type 1, else type 0. Okay, let me filter this. We have one mistake, one error. Now let me delete this row. Now let me disable this filter. And here I should filter some entries if there are 0 entries. 0 entries, 0 take profit, 0 stop loss. Okay, delete these rows. Now we have perfect data. Copy and then go to our prepared file, and here we just paste values. Okay, so this is the target 2. Target 2, it generates a bit more pips, generates a bit more percents, of course, but the drawdown becomes greater. Here we generate what? 1300s, and the drawdown is 500 pips, and this one is 14% drawdown, generated total 46. Well, not bad, not bad. The total expectancy, the thing that you should look at is this total expectancy, 0.11. Very good expectancy, very good. Nice. Let us save it, and now let us save this file as a take profit 3. Take profit 3. Okay, perfect. And here in take profit 3 we will delete take profit 2 entries, and we will go to our source file to paste them. Delete the stuff. We then go here, filter trades to get take profit 3. Okay, then we paste them here. Then we do it this way, filter the trades, mistakes, one mistake, and disable filter, and then go here, filter some 0 entries. Okay, so we have 1, 2, 3, 4, 5. Delete these rows. Perfect. Now let's go copy these results and paste them into the file. Okay, target 3 is not that good as target 1 and target 2. You see this movement becomes very choppy, and let us save it. Okay, now let us examine the files. Let's examine the files that we have. Let me go here. What was it? Pending orders 105. Optimization, decimal ratios. So here are the files. This is the initial backtest. Then we have 3 continuation: take profit, take profit 1, take profit 2, take profit 3. And then we have reversals: take profit 1, take profit 2, take profit 3. Let us do it this way. We will look at this one. Look at the continuation: take profit 1, continuation 0.8, and look at reversal. So continuation versus reversal. Let me arrange them side by side. So we have them this way. The expectancy is 0.8, and here we have the expectancy of 0.7. So the expectancy is pretty much the same. And well, 0.81 and 0.77, it is almost the same. The next one, let's compare the second target from here, and let's compare the second target from here. Let me place them side by side. Okay, so what we have here, the expectancy is 11 for a reversal, and the expectancy is 12, almost 13 for continuation. So you see it moves much better. So this is the second target. Good. And now let's compare the third take profit 3. So we will open this, and then we will open this, take profit 3. Okay, so what we have here is the expectancy of 0.8, and here we have an expectancy of 0.6, almost 0.6, so 0.5. Well, so my conclusion is the following, that the best target is the target 2. It shows the highest expectancy, and of course choose the direction of the pattern according to the backtest. Okay, so just use this Excel spreadsheet table to choose the direction. Here, if it is red, then you trade it as continuation. If it is green, then you trade it as a reversal. In MPS, you have a possibility to do that automatically. MPS will automatically draw the direction of the pattern. Let me then go to reset the pattern. Then let me apply some key. Okay, let me go here, enable the first pattern, and let me set this 32786 AB 321. Okay, XA 786 105. Okay, let me simply change the color, and let me call it a unified Gartley. Perfect. So only one pattern needed, but its range is wide, so total range. Okay, and what you need to do, sorry, the Prax12, it's an identification algorithm, Prax12. So what else you need to do? You need to attach a special file that will control the direction of its levels. So we have patterns here, lots of patterns, and they are all reversal patterns. So you see, if I click the inverse, they become continuation patterns, but to do it better, let's attach a special file. So I have already these files attached. I will go to open the other folder. I will go to MQL4 and go to file, and there is a special file that is called Prax12 Eurodollar. Where is this Eurodollar? Ratios. I deliberately made the name wrong. It says Prax12 Eurodollar 30-minute ratios 1, but if I rename it back to Eurodollar ratios, then the file starts working. So if you guys don't know what we have in this file, we have exactly the same table. So up to 0.4, up to 0.5, up to 0.6, up to 0.7, up to 0.8, 9, and 1, and up to 0.4, 0.5. This is B point, this is C point. And here we have the results, exactly those that we had in the backtest. Which one? Here it is. Exactly those that we have here, 25, 33, 14. So they are exactly the same. 25, 33, 14. And then MPS reads the file. Actually, it reads the results of your backtest, and then it decides what direction to trade, what direction to draw the patterns. So you can see that even if I click the button inverse, it doesn't work. MPS ignores the button, and it only uses the file for placing targets and stop losses. So very handy to do it this way. And as I told you, not only hitting to the first target, but more profitable if you will look for the second target. You will be more profitable. And the probability for hitting the first target is around 60% using this stuff. Using these files, using these ratios, using this approach. And the probability of hitting the second target is around 40%. It is 41 to be exact for continuation patterns, and it is 38 for reversal patterns to hit your second target. So if you are tolerant to this, many small losses and huge winners, then this one is the best because it has the greatest expectancy, the second target. Okay, well, that's it for today. I hope you like this video. I hope you find it useful. I hope that I motivated you to do your own market research to find under what conditions patterns work better, under what conditions they don't work at all. Maybe you will also find some other ways to improve these strategies. And good luck